Done.
Thank you.
All right. So let's now look at the first and foremost, the aspects that one has to consider when there is a change. Now, whenever there is a change that is happening, first and foremost, there should be a terms which is written in the existing joint development agreement permitting existing developer to cancel, or the landowner itself having right to cancel. So one has to, while drafting the joint development agreement, there should be an attention that needs to be carved out for what if the contract is not being fulfilled by either of the parties, either the landowner giving a clear titles or obtaining permissions and land being ready for constructing, or the developer doing or fulfilling the activities he has promised. Not just that, one has to also consider the fiscal loss, that is on income tax. The existing developer would have offered some amounts as the construction revenue or expenses have been claimed, even GST. The activity of the supply has triggered and input tax credit. If it is a commercial building, input tax credit would have already been availed. More importantly, RERA, which is more governing factor, the permissions that are there has to be seen. Then also the commercial viability, because with the change in the new contract, the new terms come in. Maybe the old terms will continue, but new terms may come in. So one has to also see that whenever there is a change which is happening, are these being taken care? Now let us start with the first and foremost, which is RERA related aspects. Under RERA, there is an obligation. There is an obligation of the promoter, who is the existing promoter. And by the way, when we say promoter, there could be a landowner promoter or the developer promoter. There could be two obligations to be fulfilled by the promoters, because since the promoter is responsible to complete the project, since there is a change in the promoter that is happening, existing developer is getting relieved and a new developer is coming in. So there has to be first and foremost a written consent. A written consent or approval from 2/3 of the allottees. So from the 2/3 of the allottees, the written confirmation should be there. And not just that, this is applicable even for the plots. This is one important thing one has to consider when they're under the RERA, both sale of buildings and the plots have come into the ambit. So this transaction can appear both. And the technical feasibility, sometimes it could be arising over the technical competency or the practical challenges which are there on the ground. And there is also one have to look at it that at the time of entering into getting a project registered, I have applied for the completion at a time. Now, unless otherwise I don't touch it, right? The intending promoter, if do not say it, do not seek for the time, the existing time would be continuing. And if there are any defaults that has happened, the new developer, the intending promoter, he would be liable for any consequences or the breach of the delay. The new developer cannot seek a remedy saying that the old developer has delayed it, whatever be the thing, the new developer is also responsible to it. But today's discussion is more on the GST aspects related. Now, when it comes to GST, the aspects one has to consider is firstly whether it is an activity of a supply or not a supply. If it is a supply, what is the nature of that supply? No, under GST, though it is goods and services tax, finally it has to be either goods or service. You cannot supply something saying it is both goods and services because it's goods and services tax. You finally have to ultimately say either it is good or a service, and that is where schedule 2 comes to rescue whenever there is an ambiguity finalizing something whether it is a goods or service. Then, having understood that it is a good or a service, they should also fit into taxation. Section 9 defines the taxation. So the taxability read with the exemptions have to be considered, and there should be a rate at which I need to discharge the tax. If any element of this is missing, then the taxation per se itself will be a question mark under GST. So we will spend some time in understanding these aspects before looking into the core aspect of the change that happens. The first and foremost, supply. Section 7 of the Act deals with the supply, and which says supply as an inclusive definition, and supply would include all forms of the supply of goods or services. And they have given 8 different adjectives. So, or it could be verb, so which is sale, barter, transfer, exchange, lease, rental, lease, disposal. All these forms have been given as an activity of supply. Now, the foremost condition is it is supply of goods or services or both. Firstly, it has to be supply. It has to be supply of goods or services or both. If this condition is fulfilled, only then I would get into a entry for levy. And the levy can happen when a supply is happening. So it is the aspects of the taxation is also embedded here. It says on the value which has been determined and the rate which has been notified by the council. So for the levy to happen, there shall be a supply, there shall be a value, and there shall be a rate. Now let's look at these transactions of real estate, whether it is goods or service. For that, we need to refer what goods is. Goods means every kind of movable property. If something you can move it, like something you can have an experience of touch, feel, and move it from one place to another place, then it would be treated as supply of goods. If there is no movability, firstly, it is not goods. So for it to qualify as a goods, it has to be a property and movable property. What does the service? Service is anything other than goods. Of course, it excludes money, but it is anything other than goods. Now, what is the scope of the word anything when it is word anything other than goods? I think we should read anything as everything. Everything other than goods would be service. Now, you may say that wouldn't be absurdity to say land as a service. I'll come there, but right now, as of this slide, the way we can interpret service means anything other than goods. Goods means something which lacks movability. It is a good. All right. Now, what is the position of the land and building? Land and building, first and foremost, we have to refer to schedules, schedule 2 and schedule 3. I will jump the gun and I will come to schedule 3 first. It says if you are selling either a land or land and building subject to para 5 of schedule 2, then there is no levy. It's outside the purview of the GST. What does our schedule 2 says? Now, schedule 2 says 2 things. Firstly, activities relating to land and building is supply of service. And para 5 of schedule 2 says if the whole consideration is not received, or if any part of the consideration is received before completion, then it should be treated as supply of service. So if the whole consideration is received after completion, it becomes either supply of land and or building, then it is outside the levy. If part of the consideration is received, then it would be supply of service. Not just that, any activities relating to land and building, that is giving of lease rights, tenancy rights, all this will be treated as an activity of supply of service. Now, I am introducing a new concept or a topic which is immovable property. In fact, whole of service tax, the levy was considering an immovable property, while the GST scope got restricted only to sale of land or sale of building. Now, today's discussion has more connection to immovable property too. Firstly, the word immovable property has not been defined neither in the our GST Act nor Transfer of Property Act, but it is defined under General Clauses Act, where immovable property would include a land and the benefits that arising out of the land. So it is including a land and the benefits that are arising out of the land. Not just that, it would be a bundle of benefits. Now let's understand the benefits that arise out of an immovable property. The benefit that is arising out of an immovable property. See, whenever we say immovable property, the first thing something comes to the mind is land and building. The immovable property means land and building. That's all is the concept people always have. But this is what which is there in the foreground. Now, immovable property would also include the right, the title, and the interest in the immovable property is also the immovable property. That's what we have seen in the General Clauses Act, saying the immovable property would include the benefits that would arise out of the land is also an immovable property. So which we are now saying is the benefits that are coming out of the land is also immovable property. Now, what is this right and the benefit? We will have to see. There are multiple things we have to consider. There's a right, title, and interest. Now, the first, let us look at a logical flow to understanding of this. The word right is a subset of a title. Now, title gives bundle of rights. So, a holder of title is the holder of the rights. But on conversely, a holder of rights is not the holder of title. Plain language, I have taken a property on rent. So I am enjoying a rights using the property. That doesn't make me a title holder of the property. But a title holder of the property have the right to enjoy the property, right to demolish, bundle of other rights too. Any interest which is lying outside the spheres of this title and rights, and still that one who is having an interest in immovable property may not have that title. So therefore, the rights is a limited one, and something which is identifiable to the right, okay, cannot be determined or equivalent to the title. So if I have to sum up that the word the right is little inferior to the title. The moment that I am saying that it is inferior to the title, the benefits arising out of the land and the supply of such benefits may not be equivalent to sale of land. So immovable property would definitely include the land and the benefits. So the land is there, the benefits are there, coupled with it is an immovable property. The immovable property, when I am selling, back of the mind, we are saying that land and building, but immovable property also has the benefits. Imagine a situation that I am permitting someone to come into my land and develop a property. So I am giving a development right. By virtue of the development right, the developer doesn't become the absolute owner of the land. After constructing the apartments, the developer is getting some portion of the area by virtue of the joint development agreement. So the rights in the constructed unit are getting transferred by virtue of the JD, and the JD as a power of attorney holder. So when a builder is executing a sale deed, he is not conveying the absolute ownership as a owner. He is conveying the ownership by virtue of the right he has received from the joint development agreement. So to sum up, I would say sale of land is different from the sale of a right in the immobile property. So that is where the understanding the immobile property rights is very important. So the word right and the right to these rights. So the rights would be comprising, which has a 4 component, and this is what the background material of the ICA has beautifully. So who is the one who is having the right? Against whom this right is being used? So against who can enforce this right, and to whom the right can be enforced, and to whom the right can be transferred. So finally, if I have to say, the land and the benefits arising from the land, both are 2 different activities. The land is different from the benefits arising from the land. They are not one and the same. Just because they are together bundled, we have to identify this. Now, why are we having this discussion? Because when there is a transfer of the property during midway construction by one existing developer to a new developer, what is the transaction? Can you say an incompleted building as a sale of building? So now if we have to look at the scenario, the expectation, let me just create one. The expectation, the end customer or the landowner was to build some apartments in a constructed thing. Now, if this was the
Venu,
yeah,
screen is not being. I'm not able to see the screen. Only the white screen is being appearing.
Oh, okay. Screen
I don't know whether others.
getting projected. 1 second.
Ashika, you're also okay. Now we are able to see.
All right. No, I was trying to.
No.
Whatever I was writing on the screen, those things were not visible.
Okay. Visible. It was visible. Now also presently on the screen that one mark is visible.
Okay. Let's. Okay. Now I will come back this again. So let us look at the expectation which at the time the joint development.
I think we lost again.
Yeah. Okay. At the time the JD was entered, the expectation was to have some apartment constructed with units. But right now, what that is left could be I have started a foundation and left it, or I did a leveling of the land. It could be in various stages. Now the project is complete, is done. Now this project which is there at the various stages is handed over to a new person to complete it in this fashion. So the expectation now is someone who is taking a project. So there is an existing developer. So someone is taking, the new developer is taking the project from the existing developer and is converting back to fulfill the original JD terms. Now this is what happening. So what will be the taxation when these rights happen? In fact, this slide is what I was saying, that where the ICA has beautifully covered, because since the immobile property itself is not defined, so we can refer to General Clauses Act. In fact, the Transfer of Property Act, it only says immobile property. What immobile property would include doesn't. So there is no specific definition of immobile property. The General Clauses Act, which says it includes the land and the benefits that would arise out of the land. Now, the benefits that arise out of the land, when we come to the GST, now the benefits that are arising out of the land which are currently there is classified as goods. So again, one basic example, if I give is, if I am selling a mango crop, and I'm giving a right to someone to enter and severe the crop, it is supply of goods. But I'm entering into a contract for a future revenue that is going to come. So that is a supply of service. But if I'm selling the land along with the mango garden in it, is an immobile property. Now, when I'm selling the immobile property, the property and the rights and the benefits that are attached to that is also being sold. So this classification is important to understand when this new sale that is happening between the existing developer and the new developer. So let's look at what are the activities, what is the nature of supply, and how the levy would be determined. Ashika, would you like to continue from here?
Yeah, okay, sir.
I think Venu, I'd like to add a couple of points at this stage.
Yes, sir.
Okay. Yeah. I think I should first thank Venu for giving out such a detailed, in-depth into the aspects which are beyond the GST law but connected to GST law, the property, more property, right, etc. In fact, the topic which we are handling today would be extraordinary circumstances. It may not come to businesses in routine, but when it comes, it will have a huge impact because the amount stakes involved will be too huge. We, in the scenarios which was explained, was essentially the driving based on the agreement or the agreed terms, contracts, etc. But practically, or in other words, in reality, essentially this transfer of the projects do happen in between when there is no agreement which is specified, and suddenly everybody comes onto the table and try to resolve the issue because they are in a situation which calls an attention of everybody because things are not moving forward as is expected in majority scenarios. So there, I think most of the time the existing contracts go, new contracts come. Existing rights are foregone, new rights are created with an alteration, novation, or assignment. All the mixtures, the Indian contract are brought into it. So when we are only dealing in today's session, the fundamental aspects, but when you are applying to a given scenario, you need to be cautious of the fact that whether what is your situation and whatever the discussion which we are making applies to it or not, you have to be very cautious about it. And the next aspect of it is concerned. We extracted the aspects relating to a RERA provision, wherein if you see the obligation which the old developer was required to deliver to the customers is automatically shifted. All the obligations of the old developer gets shifted to the new developer. Now the question arises, here is a law which once you agree for stepping into the shoes of a old developer, irrespective of your arrangement, your agreement with the outgoing developer and a landowner, the law mandates that original contractual terms, whichever was there, is automatically implied onto you, and any agreement diluting may not be a valid. So you may have to keep in mind, I will not take this responsibility, all those aspects, you cannot do anything. And the third aspect which I noted was, in fact, I should put on record at this point in time, though in this deliberation, we are taking a conservative view, but in the field, there may be an aggressive view also as to the transactions of immovable property by saying that the GST is applicable only for a transaction of supply of a goods or services or both. Immovable property cannot be construed in a stricter sense as a goods or services. Hence, there cannot be a tax on immovable property. However, all the notifications, circulars which are issued by the government are not inclined to accept this proposition. So when we are deliberating in this session, we are taking a conservative view and going with the view which is being propagated by the government, not getting into litigation. If somebody wants to take a very, very aggressive view, they can take a separate thing, but I'm just putting on record why we are saying like this because of the conservative view. So I thought that, I need to bring out this aspect for the further deliberation is going to happen. Ashika, you can please continue, Ashika.
Ashika? All right. So let's continue. And if we look at the nature of supply, now what we all know is the developer from a works contract activity, he is moving into a construction service. That is what a developer is actually doing it. And there is one element of transfer of the right which is there in the property that is happening. We would look at it if the whole of the joint venture activity or whole of the entity is being transferred, how the taxation would happen. These are the things which will be covering it. Now, construction service, the schedule 2 entry 5B, as we said, if you are selling something during the course of construction. So if your first receipt is realized even before you get the completion certificate, then it is supply of service. There's no doubt in it. The works contract service would be is the allied activities that you are doing. Now you may ask, why will be there a necessity of a works contract when there is a transfer of a halted project to a new project? It may so happen the allottees have not agreed to the new developer or the terms were not conducive. The allottees will go ahead and hire a works contractor who will be completing the project for them. So there could be one extreme situation. So, but works contract means it is an activity relating to construction or a contract for a building or a construction. Ultimately, that activity should be towards an immovable property. Under the erstwhile law, works contract means something where the supply of goods and services or the like goods, like I'm doing an AC erection, installation, repair, everything was a works contract. But now today works contract is something relating to immovable property, only it is works contract. So construction of building is a works contract because I am creating an immovable property. Anything which I'm doing and both labor and material is involved but not resulting into an immovable property, then it is not a works contract, right? And there shall be an activity of transfer of property in goods for you to say works contract. So if it is pure services, it is not again a works contract. Yeah. So let's get into the transfer of the right in the property. Now, the transfer of the right in the property, it is a supply of service. But when you transfer the business as a whole, here is one important aspect why I would like to bring attention. We have an entry in schedule 2 whenever there is a transfer of the business, and that would include the goods which are forming part of the business. And if someone is disposing those goods not as a goods per se, but the entire entity is being transferred. The business is transferred as a going concern to other person. Then such activity is treated as supply of service. So I am now bringing first scenario. There will, as I said in the beginning, there would be multiple scenarios. There could be a scenario where, as an existing developer, I have bundle of rights. My joint development agreement is there. I started constructing, and there is some portion of the construction happened, and I've collected the monies. I am now transferring the entire business as such to a new developer. I would like to bring attention to the entry number 2 of notification 12/2017. which would say the services by way of transfer of going concern, and very important, as a whole or an independent part thereof. When I say as a whole or an independent part of the part thereof, I as a developer doing multiple projects which I'm transferring the whole of it, or there is an independent identifiable project which I can identify and transfer it as a going concern. And what does the going concern means? The going concern, it from the accounting perspective, it means there is a continuation in the operations where there is a foreseeable future. So in my place, someone is coming and the operations are continuing. There is a future, and the future would always be some revenues that would be generated or accrued from it. That is called a going concern. So if you're transferring a running business which is capable of being carried on by the new purchaser, the new developer, as an independent business, I would say it would satisfy the definition of the going concern. And when there is a transfer of a going concern or an independent part thereof, the first and foremost, you will have the benefit of availing exemption for the whole of it. And the going concern, when you're transferring, you will be transferring the assets and the liabilities attached to it. I would have collected some monies from the customer, and these monies collected from the customer would determine the liability, because I have obligation to fulfill the contract to them or refund the money. I have a stock of steel, cement, raw form or constructed form. So it got into wall, there is a form that exists. So this is the first thing one has to be aware of. Next, when we look at the activities bifurcated, that I am only giving a subcontracting work, changing the contractor, it would still be a works contract, the rate 12-18, but now all even the government contracts move to 18%. An activity which you are doing construction services, which is transfer, includes sale of undivided share of land, where the new developer is undertaking to the end customers. That would be a construction service. It would be a rate at either 1, 5 or commercial being the 12. And of course, this is on the gross value. The right way to read it is 1.5, 7.5 or 18. But someone is only selling the right, transferring the rights. Now you may ask, when will this situation arise? I have in the next slide, I'll explain. So it would be at 18%. But you are doing a transfer as a going concern, then there is an exemption that are available. So multiple scenarios that would arise and that would be possible. Let's look at what the scenarios. The situation is there is no construction initiated, only JD is entered. Either you could have a situation where there is no construction initiated, only JD is entered, or you are selling something where the construction is under progress. Now, between the old developer to existing developer to the new developer, between the existing developer and the new developer, how are they going to settle the compensation? Either they may agree upon the revenues that can be shared, or some upfront monetary consideration that can come up, or they may say that we will share the constructed units that are going to come up. What will be the position of the landowner? They may continue with the old JD terms or the new terms that may come up. Either of that could happen. And the customers, there can be a change. Since there is a change in the contract, there is a change in the contractor, there can be change in the terms also. I have entered for a apartment with 1 crore. Now the property, if I want it with the new developer, the developer says, look, there is an escalation, the cost will go up to 105. There can be change in the terms, there can be change in the time at which it will be given. Or the customers would get into a last activity where they will do a self-development basis. So they will form an association of persons. They will be collectively raising the funds from the rest of the buyers, and the AOP will be executing. Please note, AOP should be treated as a new developer from the taxation perspective in terms of understanding how the taxation would come up. Let's look at these scenarios. So when there is no construction initiated, there's no construction that has been initiated. In terms of the applicability, what you are transferring is you're only transferring some of the rights that you have. What you have is currently you have entered into a joint development agreement. You said, okay, you're stopping your joint development agreement. You're reassigning the joint development agreement right to someone. It is like you have a right to sell a property and you are selling that right to someone. So you have a right to construct, you are selling that right to someone else. And in doing so, you will be getting a goodwill or you will get some a lump sum activity. So that the nature of the supply would be a supply of service and the rate of 18%. What would be the HSN? It would still be 9985 because you are not undertaking a construction activity. It cannot be a 9954 HSN. But what would be the situation where there is already some work in progress which is there? And I'm talking about a scenario where you are not doing a transfer on a going concern basis. You are getting into an agreement saying that independent of what is so, because the situations that can again come up now is, let me again create the different situations that would come up, and for which let us look at what did the existing developer has done. Let's look at the situation the existing developer has done. In the whole of the project, let's say the work completed. This is my work completed is so much. The money which I have collected from the customers, this is my collections, is X amount. And I still have some amount of the stock, my stock that is there. So when he is entering into a new agreement with the new developer, it is clear from the contract that the new developer will be compensating the existing developer for the difference that is there. Now you may ask, why would someone leave the project this way? Maybe the expectation to complete was this, and the existing developer do not have money to complete, and there are no new sales that are happening in the project. The other situation which you can think of is you have hardly done any work, but the monies have been collected from the customers. Monies have been collected from the customers, and there are hardly any stock that is left. Now it could be a reverse situation. New developer will be asking money from the existing developer to take out this project. The new developer is going to ask money from the existing developer to take over this project because the monies have been collected. So why is the existing developer not collecting? Maybe these monies have been utilized elsewhere. There is no money to complete the balance money. Now keep this both in the background and let's look at the taxation. So if there is a revenue sharing agreement between the developers, there is a revenue sharing agreement and the joint development is happening. So the new developer has agreed to share the proceeds out of the money that is coming in. And this is a situation we are talking irrespective of the stage at which the construction is happening. The revenue share agreement, wherever it is there, the money proceeds which are transferred to the landowner, they're never into the GST because the developer is assuming the shoes of the landowners and his in selling the property. So full taxation of the apartments is done by the new developer. Between new developer to the existing developer, if there is any money that is being transferred. Now the questions that one has to look at is what is the work done and what is the GST that has been discharged. The new developer is paying a money towards some activity of a works contract that is being done. If it is treated as a sale of a going concern, no GST. But if it is not, then the part of the revenue will be suffering GST. Which part will be suffering? Let's look at that. I will be covering all the impact of units sold, unsold, and everything. So for the units sold, which is already been sold, so some money has been collected by the existing builder. The existing developer has already collected some money, and this money he has paid. So for the new builder who is coming in, he doesn't need to pay any GST further. Out of 100 rupees, 60 rupees has already been collected by the existing builder. So the new builder need not pay 60 rupees for the contract. He is entering with the new customer or the existing customer. Even though there is an escalation from 100, the contract went to 105. The liability to pay GST for the new builder would remain on the 105 minus the differential. Now you may ask, what is the basis or the source for us to say that even though the sale execution is happening for 105, the liability for the new builder is not on the full value, only on the differential. Now, that is where I would now bring to the definition of an immobile property. Now, the immobile property, going back to the initial discussion, it was land and building. So the new builder is entering into the project a phase in which some construction has already happened. This construction could be leveling of the land, could be some portion, some unit completed, whatever be the stage, but he is entering as a promoter. And please note, this discussion is not applicable if he is entering as a box contract. He is entering as a promoter. So when he is entering on the promoter, his right to receive from the existing customer is only the differential value. So the differential value shall be treated as the supply of construction services, and the rate of tax, that 15% is applicable only the differential value. In a crude way, if I have to say, if I am building an apartment on a hill, the amount of efforts that would be there and the land leveling or activity construction would be different. The cost of construction would be different. The pricing would be different. If you are building on a plain land, there would be a difference. If you are building on a land which is adjacent to the lake, then you got to the kind of effort you have to do putting and build the base. It is different. So the time at which the person is entering to construct, the position of the land would be different. His right would be only to the from that place to the completion place. The incremental portion would be the right. So the GST to the new builder is applicable only on the incremental money which is collected. If there is an advance money which has already been collected and the GST which has to be discharged, if the advances have not been discharged as the construction services, then the new builder has to discharge the GST on it. For the pending value, the invoice, everything has to be discharged by the new builder and not the old builder, because old builder is now exiting from the project. And for the units which have not been sold, the position is same. There is no change because it's a fresh contract that the new builder is going to enter. So there is no change. The rates are the same. There is no ambiguity in the rates. It is the 1.5, 7.5, or 18, or 1, 5, 12 effectively on the total value. Now, the development right aspect, per se, the levy on the development right, there wouldn't be any change in the development right taxation. It is the landowner who has given the development right. You may ask, has the existing builder transferred any of the development right to the new developer? In both the situation, the development right taxability is on the new developer only, the new builder. The development right taxability is on the new builder because it is the levy under reverse charge. And the taxation would shift to the end date. So the liability will be only on the unsold portion. What does the unsold portion means? The unsold in the hands of the new builder. Existing builder, he has sold something, will be treated as sold. Landowner will be getting some portion by virtue of the jury, it would be treated as sold. So the development right will be struck only to those units which are left unsold in the hands of the new builder. Only that taxation that the new builder has to pay, and there is no other levy that the new builder has to pay. So if the taxes have already been discharged, then the existing builder is seized from the liability. But if there is no work which has been done, existing builder has not done any work, he can definitely apply for a refund because he has paid the taxes on advance without doing any work, and that money will be handed over to the new builder because he is the one who is now entering into the contract with the customer, and the new builder has to discharge the tax. To the extent the taxes which have not been discharged, only new builder has to discharge the taxes. What happens to the landowner share? Even the landowner share also, the existing builder, if he is considering as generally the time of supply by virtue of the new entry now 4 and 5 or 2019, the time is shifted to the on the completion date. But if someone has discharged it on earlier and he is now no longer a promoter, he can again take for the refund. But please note, the liability to discharge the taxes on the development right and the landowner share will now become to the new builder. Then comes the compensation. Ashika would like to take this portion.
She should take it. Ashika, you're.
Okay, sir. Yes, sir. Are you able to hear me?
Yeah, you are able to hear.
Okay. So as we are discussing about where the new builder came into a picture, so obviously it may also be a case that is reduced. He might get some part of compensation to the landowner and plus the developer. And there may be even a change in the ratio. Means earlier it was agreed to be 40-60, then it got changed to 70-30 with the landowner. So we will be, before looking into the situation, what could have arise, let us first understand what the basic provision is. So first part is basic provision supply. So already discussed that supply is very vast, but in that it is mentioned that supply should be made or agreed to be made for a consideration. When we read this word, the thing is that there should be a mutual understanding. Means where a one person and the another person has come together, where one is a promise to do and another is promised to accept. So there is a willingness, mutual understanding, there is a flow of consideration from one person to another. That is quid pro quo, if we say. Means one person will give some, another person money. So over here, obviously landowner is giving the development rights, and in against that, the development landowner.
Ashika, I'm not here.
Your voice is not clear.
Yeah,
But when we heard compensation,
Ashika, your
it is
voice is breaking.
normal.
Ashika ma'am, can you hear us? Your voice is not completely audible.
Okay, let me continue. Now, what is that one should be considering when whenever there is a contract is broken, when now the contract is broken? So what would be the position on the taxation if there is, now here we are talking about a situation where there is a liquidated damages that are arising. When will the situation arise that there is a dispute between the existing developer and the landowner and the contract is broken? Maybe landowner may end up paying to the existing builder or the existing builder is getting a compensation. What are the factors before even talking about the taxation? What are the factors one has to consider? Firstly, has the contract envisaged the situation? Has the contract envisaged the situation that breaking of the contract is permissible? Okay. If at all something happens, has the contract said this is the compensation that needs to be paid? Only then it becomes an activity of consideration. And the what is the object? Is the object to compensate for the loss or the damage suffered, or it has been entered a fixed sum? Irrespective of whatever it is, there has been a fixed sum that has been entered into the contract. Now, one have to look into the contractual terms, and then we have to come up whether there is a liability that exists or not, because there is a nexus between the supply and consideration. Now, for you to say a supply, for you to say there is an activity of supply, as which is mentioned earlier in para 5E of schedule 2, you have agreed for an obligation, either from refrain, tolerating, or something. You have agreed that something can happen, not just mere agreeing, you have fixed a consideration to it. Now, mere compensation will not give you any GST levy. It has to be a consideration. Only an activity which is a consideration can bring in the aspect of the GST levy. So, if it is mere to compensate a loss, just because there is a mere flow of the money, in my view, levy of GST will not arise. So, how do we differentiate or distinguish? You got to look whether the contract is having a clause for giving a consideration for tolerating a act. Vis-a-vis the consideration that you have received, though, even though I'm using the word consideration, the money you have received is not for tolerating an act. This is not for tolerating an act. This is mere compensating the losses that you have incurred by not fulfilling by some obligation. In such a situation, there cannot be a GST levy. So, whenever you are realizing some liquidated damages, you got to be very careful to choose and say whether there can be a levy or no levy. For example, the contract was silent. I went ahead, fought with the government, fought in the court, and gained some compensation. Such compensation is, you may say, money consideration received, money received, windfall gain, whatever be the word one may say, but it is outside the scope of levy because it's a compensation that is received to take care of some losses that you have incurred which was not foreseen. Contract is always meant for enforcing. So if you are realizing some money outside the contract, no GST, out of the contract arising in the contract, then the GST would be applicable. So these are the various terms, contracts that one has to look at it. So if the defaulted party, let's say between landowner and the developer, the compensation is received, obviously the GST has to be tested, whether whatever is the basis the wordings that are used. But however, if the developer has paid some taxes and did not fulfill any of the obligation, then he can definitely go for the refund of the GST. Since the liability to pay GST on the TDR or the construction activity is at the end of the project, but he has done ahead in advance. And between the developer to the buyers and the landowner, the position is all the same, whether it is a compensation or consideration in the nature. Who is defaulting? What does the default? Because even the customers may raise complaint. They may go to RERA tribunal and seek for a compensation, saying that since the project did not complete on time and I have to extend the stay where I am staying, I am incurring additional rental cost, I am continuing paying my EMIs, I am incurring additional interest burden. So a portion being awarded. So that portion, assuming if the portion of the money which is awarded to the customers is beyond the 20 lakhs, you may say that would the GST be applicable? Definitely not. This is a compensation which is fought and taken, right? Even if it is provided, but there should also be an ingredient of the business that should be fulfilled. Now, the liability which is there on the landowner, this is the last slide. There is no change in the liability on the landowner. Between he moved from existing builder to a new builder, one JD to another JD. In the course of the JD, there is a change in the ratio. Earlier it was 40-60 area sharing. Now it might have become 30-70 revenue sharing. Any of those changes, there will not be any levy. However, if the landowner is selling his units before completion of OC, he will have to pay GST, which was there earlier also. That position would continue. There wouldn't be any change in that position. So these are the various aspects one should be considering. And now we can take questions if you have any. Rajesh sir?
I think Venu, there's a good deliberation, especially this liquidated damages. I have heard of late, after the circular which has come in, everybody is saying anything which I receive extra is not liable for tax. That particular notion, be conscious that there is nothing like a such blanket relaxation or exemption given by the circular. It all depends. In fact, Venu was highlighting very clearly various factors as to the contract. One, what was mentioning was a condition of a contract, compensation for the contract, and a consideration for the contract. Three are different elements in a contract, which we need to identify what is that we are talking about and look at it. And in fact, here is a scenario where any transfer of this existing project to the new developer comes in. There is going to be a major important action plan which is required under the RERA, without which things cannot be moved. So proper consultation to that effect is required to be taken. Point number one. Point number two, at the same time, need to take a proper consultation as to the drafting of the settlement deed, agreements, the rearrangement deed, whether it should be an assignment deed or a novation deed or a new JD, whatever it is. A proper consultation, keeping in mind the points which we discussed, would actually protect the interest of the company. Otherwise, there may be situations which may arise where multiple people do pay taxes and the benefit of which cannot be availed by the other party, adding to the cost of the project. And second thing, Venu did mention a couple of times, if you have already paid a tax, but you have not supplied the goods or services, you can go and apply it for a refund perspective. Refund. Couple of challenges do come. Point number one, among leaving out all other things, proving whether service there, not there, technically, I'm leaving that all this apart. One of the point which always comes to a question is limitation. If I have paid a tax before 2 years, and now can I go and claim a refund? Because the project was running for last 5 years, all this dispute started in last 1 year. Whether can I go and claim, but I didn't stop the work more than 3 years back. So I would have already paid a GST in the past. So whether the time limit of 2 years is applicable or not, when it comes to that question, I'd like to bring to your attention one of the case where it was the flats were booked by the various things. Then there was a permission issue came up. Then the matter went to High Court. They cancelled the permission to further construct above certain levels. Various buyers who had booked had to cancel all those bookings. The company who had already paid a service tax case, went and asked for a refund of it. The department's contention was the time limit between the date of your payment and the date of your refund claim is much beyond 1 year. In services, the period is 1 year. So you're not entitled. The matter traveled up to Karnataka High Court. Recently, Karnataka High Court has given a ruling saying that the time limit is not applicable for that particular situation. Even if it's to be counted, should from the cancellation of that particular agreement. So till then it was there. So we can always make use of those things. I think these were some points. I think many points. This is a topic which, if we take 1 day session, can be carried out with covering various aspects with examples. With the available time, I think I should appreciate the way Venu has dealt it. Thank you, Venu. Over to you, Venu. Questions, if any, you can answer. Shweta ma'am, questions.
Few registrants, they are directly messaging me. They are saying that it was a very interactive session. So I'm asking them that they can unmute themselves. They can ask the questions. So I request our participants, if they have any questions regarding the today's topic, they can unmute themselves and they can ask their questions from our respected speakers. Or they can message to me.
Namaste.
Yeah, please tell. May I know your name?
Sorry, in between there was some issue with my speaker. So I was just checking if there are any questions on the RERA side. If Vinay is also available, we can discuss that.
Yeah. Vinay is there, I think, right? No, he's
Hi,
not.
hi. I'm here. I'm here.
Okay.
Any specific questions on RERA I can address to the audience here. I know that the subject is a very critical, very unique topic or a subject, and not many would be required to know this and try to understand this topic or subject itself. But when it comes to the reality, there are a lot of challenges in terms of the takeover of the project, either under RERA or under GST or including the income tax, because which has a various impact on the business itself. But it is inevitable in today's situation and scenario. Taking over is the only solution for everybody to come out from the difficulties, challenges, or clutches. If you see that the orders passed by the NCLT through IBC proceedings also to take over, so those are also called the takeover projects itself. It doesn't mean that it is between the agreement between the customer, sorry, one builder to another builder through operation of law, maybe through IBC proceedings. IBC or the resolution process may take over, or RERA authority may direct the new promoter to take over, or a government through it may be directed the government to take over and complete the project. It may come from any aspects or any side itself. But practice is a different than what we all understood as a theory, and it's a very a unique, difficult, tough subject to understand, digest, and effectively come out from the process of takeover. That only I can say that. If anybody has any specific questions related to the RERA, I can address and answer. Otherwise, Shweta madam, you can share the mail details, mail ID details, even audience can come back to discuss with us. Thank you.
Sure, sir. Yes, sir. I have come up with one question. So I think Mr. Mahesh is asking, if the developer is under fuller tax method 12% on change of developer, whether the percentage will be reset to 5% or 1% as may be the case.
Okay, so I am presuming this discussion is coming on a residential project, and the residential project started before March 2019. So this is a project which has been started March 2019, and the new developer is now entering into this project. The old builder has filed Form 4 and has said that, okay, fine, I want the benefit of 12%. I'm presuming this is the question. Sir, only that could be the situation, right? Can we take that assumption and go, sir? Rajesh, sir?
Yeah, it is merely a substitution of the that builder, and in my understanding, it can always be said, I am stepping into the shoes of the existing developer, so I also be given that particular benefit because I am not entering into any new project. The project is already running. Under RERA, if I am continuing the same project number, all what I would have opted should continue is not what my opinion.
Correct.
Okay. So any other questions, participants?
Anyhow, having said that, you can always see what is the cost viability, what is the stage of the project, and see and examine if you want to shift. Is there any option for shifting? Also, you can examine. It's a.
In fact, if I have to say a thumb rule, who should choose? Of course, this is academic now because the decision was already over. The reason to continue under 12% can actually arise that if I have more construction which I have to do, the quantum of input tax credit which is likely to come up is high. It would have been a worthwhile decision to continue under the old regime and pay tax. But if you have completed the substantial portion of the work, and I would always say that it is opting to the new regime would be better, because you definitely do not have any more input tax credit to get it. And for the customer's perspective, if you ask them to pay 12%, it would look little high. So considering that, the book department definition, which has already been given for ongoing project, I think generally for any new builder entering, the opting the new rate would be better, but case to case is what we have to say.
One more thing is that we brought out a new concept of this transfer of business in a transfer of project. I think if somebody wants to look at it, please look at it. There is a possible option with Venu discussed about all those conditions. If you're able to fulfill the conditions, then it becomes a continuation of the same business. The next is concerned in such a scenario, this option would automatically continue because it's merely a transfer of business.
Correct.
Okay, so guest speakers, like they have told us about the questions. So participants, any other questions? You can unmute yourself or you can message us.
And this subject is itself is a little dicey, and I would request participants to reach out to the support area of RERA, and we would take up your questions case to case basis.
Yes, sir. So as of now, I think we should wind up the
Yes.
session. So thank you, Venu sir. Thank you, Rajesh sir, to share your valuable time for today's session on Project Halted and hand it over to the new builder. And special thanks to Vinay sir for sharing his ideas on the topic. Friends, if you have, as just Venu sir told us, if you have